We have 3 forums tonight with a total of 9 industry experts. All are professional in their fields. Our first panel is Know Your Local Market. That's with Eric Bond, a Principal Market Analyst with CMHC, and Scott Brown, the CEO of Fifth Avenue Real Estate Marketing. Our second panel tonight, Financial Strategies, will run from 6 to 6:45 with the Lisa Aragorn, mortgage expert, Bridgestone Financing Pros, and DLC Mountain View Limited, Clint Grayson, District Vice President, Home Equity Bank, and Chris Becker, partner of Kuhn LLP. Our third panel, which will run from 7 to 7:45, is a Smart Shopping panel with Wendy Atchison, VP and Registrar, Licensing and Consumer Services, Tony Giaventu, Executive Director of the Condominium Homeowners Association, Phil Moore, President of the Real Estate Board of Greater Vancouver, and Glenn Druxbury, owner and founder, Druxbury and Associates Building Inspection and Consulting. Our panel experts, along with our resident builders, TQ Construction and PD Moore Homes and Fortis BC, will be available after each forum in the marketplace, located around the perimeter of the room to answer your questions. As for the evening's format, we'll have brief presentations. I'll ask a series of questions to the panel members and then open it up to you for your questions, both the audience here and those online. And finally, before we begin, Dawn mentioned that there's a questionnaire located on your chair. I would encourage you to fill it out throughout the evening. All that information and data help us to make sure that our subsequent events improve each time. So let's get to the experts. Leading off tonight on our first panel is Know Your Market. We have Eric Bond from CMHC and Scott Brown from Fifth Avenue Marketing. Eric is CMHC's Principal Market Analyst and spokesperson for Metro Vancouver and the Fraser Valley. He provides commentary on new home construction, resale and rental market developments and their impact on the housing market. He holds a Bachelor of Science degree in Chemistry and Economics from Dalhousie University and a Master of Arts in Economics from the University of British Columbia. As President and CEO of Fifth Avenue Marketing, Scott Brown directly oversees the growth and success of the project marketing and sales team, responsible for delivering sales success and developer partner satisfaction. Throughout his 28 years of work experience, Scott has formed and led teams that have set sales records in North America and Asia. He has consistently provided high-quality strategic advisory services to leading global organizations and expanded his marketing and sales strategy, creation, culture development, and performance enhancement expertise. Scott is a sought-after media resource and speaker with respect to the status of the multifamily home market in metropolitan Toronto. So we'll start in metropolitan Vancouver. Sorry about that. We'll start with Eric from CMHC.
Good evening and thank you. It's a pleasure to be here tonight, and I'd like to thank the Homebuilders Association Vancouver for the opportunity to present. So it's great to see many of you here and online as well to learn more about buying a home, which is certainly can be a very challenging decision. You have the stress of finding the home. Then you may also be wondering about current market conditions in Vancouver, how those have changed in the past year, and then what this means for you. So this presentation will hopefully give you some of the information that you need to understand what is happening in the Vancouver housing market at a high level. CMHC is Canada's national housing agency, and in addition to providing mortgage loan insurance to the market, we have a number of resources available to help you with the home buying process, and I'll begin by highlighting some of those to you quickly. So in your loot bags, you will have a printed copy of CMHC's Home Buying Step-by-Step Guide. This is a great tool to help you through the home buying process, from deciding whether becoming a homeowner is right for you, right up to arranging for a home inspection prior to finalizing your offer. So if you Google buying a home, you will also find this document and its worksheets available on our website, which you can also access directly at cmhc.ca/buying. There are a couple of other helpful tools on our website as well, including a guide specifically geared towards buyers of condominiums to learn more about condo living and governance. As well, we have calculators to help you work through different financial scenarios and government programs that might be available to you. Lastly, if you are new to Canada and are looking to buy your own home, we have created a separate portal that is available in 8 languages that deals with topics unique to your situation. We also have our housing market information portal. And this is a great map-driven tool where you can find all of the CMHC source data that I'm about to share with you, as well as our market research reports. We have data on the rental market if, for example, you wanted to compare the cost of renting versus home ownership for a given area. All of CMHC's information is freely available to the public, and I hope it will be helpful to you as you explore your housing options. So let's now look at the Vancouver resale home market. So to start with a longer-term perspective, here I've plotted how sales by home type have trended over the past decade, and you can see how they surged across the board between mid-2014 and mid-2016, growing well above their 10-year averages. What's also interesting is that sales of single detached homes and apartment condominiums, which are shown on the graph in blue and orange, they generally moved in lockstep over much of the past decade. But then that changed in mid-2016 when sales of single detached homes declined and lost market share to apartments and townhomes, and that gap now seems to be persisting. So what I'll propose to you is that this shift in the sales composition is largely due to relative affordability, as prices for single detached homes had reached a breaking point of sorts, after which buyers making a purchase based on their local income could no longer afford to participate in that market segment. Instead, such buyers could afford to purchase in the townhouse or apartment categories, leading to demand in those segments being much higher than in the single detached segment. What's interesting is that as of mid-2018, sales activity in all 3 market segments trended below their 10-year averages. So this started much earlier for the single detached segment, but it's now the case for apartments and townhomes as well. So this trend has manifested itself in a shift in market conditions. And to understand the evolution of the resale market a little bit further, I want to look at the sales to available listings ratio by price bracket. So this is a measure that looks at whether the market favors buyers, sellers, or is indeed seeing a balance between supply and demand that generates a predictable environment for both parties. So I've indicated the balance region on the chart here with a gray bar, and if the ratio falls below the gray band, the market favors buyers, while ratios above the band indicate that the market favors sellers. So at the beginning of 2018, we still had strong sellers market conditions for lower priced properties, particularly Fraser Valley condos, which were seeing strong year-over-year price gains at that time. Meanwhile, the high end of the market, namely properties over $2 million, were seeing buyers market conditions at the beginning of last year. Now, as the number of listings increased on the market and sales started to wane, at the end of the second quarter, those sellers' conditions in the more affordable segments of the market started to weaken. Come Q3, the Metro Vancouver housing market moved into balanced market conditions for properties between $500,000 and $1.5 million, and then buyers' market conditions for all properties over $1.5 million. This new market reality was largely unchanged up to the present at the end of Q4. What this means overall is that home buyers will have more choice in the marketplace, that some properties will take longer to sell, and that some sellers may need to or will be motivated to negotiate around their asking price. So that sets conditions for market prices to move lower, and indeed they have compared with a year ago, but the results do differ by segment. So looking here now at median prices for the Real Estate Board of Greater Vancouver Territory, single detached prices at the beginning of 2019 were 9% lower than they were at the start of 2018, while townhouse prices were 6% lower and apartment condominium prices were 7% lower. While the same broad trends have applied across the board, the more affordable segments have seen slightly lower price decreases due to the firmer market conditions present for lower priced properties. So affordability and borrowing capacity have been big drivers of these changes, and the market now clears at a lower price based on the home buyer's ability to pay, being affected by both rising interest rates over the last 18 months and tighter mortgage lending requirements. The second point I'll make with this slide is that the property ladder, which you can see in 2010, the average, or the median single detached price was about twice that of an apartment condominium. That gap increased to nearly 3 times in 2016 and has now narrowed again back towards being 2.3 times the apartment condominium price at the beginning of this year. So one interesting consequence of the softening market conditions for single detached homes is that while apartments continue to experience firmer market conditions, that property ladder could well start working again, which creates opportunities for move-up buyers. So let's now switch and talk about the new home market. So to start with a longer-term context again, demand for new homes has been very strong in recent years, and that has driven inventories of completed and unsold homes to decade lows. The increase in demand began in 2014, and as you can see on the graph, resulted in inventories being drawn down over the course of 2015 and 2016. And really since mid-2016, the supply of new homes has been very low, at under 2 months supply based on the pace of sales for much of that period. Supplies have been most constrained for the more affordable units, namely condos, and while we have seen some expansion of the inventory of single detached homes over that period. Now, it's only very recently, in the last 2 quarters, that condo inventories have started increasing in a meaningful way. And here it's that slowing resale market conditions mean that buyers will have more choices, and that includes the new home market as well. So we expect to see inventories continue to rise as a result, and new projects coming to market will likely face longer sales periods than in previous years. Now, with the high number of projects getting underway in recent years, the number of homes under construction in Greater Vancouver reached a record of 43,000 units at one time in August of 2018, which was over double the number being built at one time even 5 years ago. So there are currently 40,000 units under construction in Greater Vancouver, and that pace has eased ever so slightly, but in terms of what is being built, the vast majority are apartments, with about 26,000 of those being condos and another 8,000 being rental apartments. So going forward, we do expect rental apartments to make a greater share of the total due to the strong demand and the opportunities in that segment, but condo development will remain the dominant form of residential construction in the Lower Mainland. A significant number of condominium units are expected to be completed over the next 1 to 2 years, and while the vast majority of these units have been pre-sold, a number of them will end up on the resale market, creating more choices for buyers. So I'd like to conclude with a summary of our housing market outlook for Vancouver. I've shown the numbers here in the table at the bottom of the slide for those who are interested, but what I'm going to focus on is the story. So as 2018 progressed, demand and home prices softened across all market segments and local geographies in Metro Vancouver. Over the next 2 years, the resale home market of Metro Vancouver will be characterized by lower sales, higher inventories of homes for sale, and lower home prices compared with the recent market highs of 2015 to 2017. We expect sales to be about 20 to 25% below the pace seen in 2015 and 2016, while the average MLS price is expected to decline 7% this year and a further 4% in 2020. In the table, our forecast is presented as a range of values, since embedded in these price changes is also a shift in apartment condominiums continuing to make up a greater share of the sales mix, and our outlook is, of course, also subject to uncertainty in the trajectory of interest rates. Now, with resale market home prices moving lower and a record number of units currently under construction across the region, housing starts are expected to decline in the Vancouver area over the next 2 years. Meanwhile, the rental market is expected to remain tight across the region, with average rents continuing to increase faster than inflation. The vacancy rate is also expected to rise slightly, but it will remain low in absolute terms, at around 1.3%, which reflects the strong demand for rental housing in the region. So that concludes the bird's eye view of the Vancouver housing market that I have to share with you this evening. I'd welcome any questions you may have during the discussion, and I'll also be around for a few minutes after the session. Thank you.
And next we'll hear from Scott.
Good evening. Good evening to everybody online as well. My name is Scott Brown, as I've been introduced. Tonight's talk is entitled, "Is Now a Good Time to Buy?" In preparing for this talk, one of the things that came to mind was a couple things. So first of all, I did a deep dive for about 3 or 4 hours between the internet and everything, and I've been involved in this business in one way, shape, or form for 28, I guess it's getting closer to 30 years. We need to update that slide. So I've experienced a lot with developers and helping them make decisions about when to bring homes to market and when not to, and what consumer preferences or trends are. And that knowledge is often very helpful to the consumer too. So one of the things I researched was about timing. Because in looking and preparing for this talk, one of the things I realized was that timing had always been very critical to the most successful projects that our clients have had over 30 years. And there's a lot of theory out there that you can time the market. So I did a bunch of research, and I remember Bill Gates talking about how you could learn something in 3 hours or dive into it. So I was on the internet for about 3 hours and diving around looking at things and researching timing, and I realized one thing about timing. Timing, from my personal perspective, is very much like security. It sounds good, but it's probably a myth. So, in other words, there's no exact perfect timing to always say buy or sell. There are principles and fundamentals that can guide you to make decisions, but ultimately timing is a very personal decision. To our clients, what we say about timing right now is, it depends. If you have new product in certain neighborhoods between $300,000 and $650,000, go for it. Launch it. There's buyers for it. We sell about 900 to 1,000 homes, and while we do research on the whole Metro Vancouver market, we intentionally, for years, have concentrated on the suburban markets. So despite what the media is telling you right now, when I say 1 out of every 5 multifamily homes is sold by someone with a license from Fifth Avenue, we've sold over 100 homes so far this year. So we're actually, the market, there are people, 100 people have made a decision to buy. But they're buying product between $300,000 and $650,000, either end users or investors. So to them, they've determined it is a good time to buy because they believe that those markets are desirable and the job base in these things are going to continue. And they also believe these communities are desirable and they need a place to live. But if you were selling an $800,000 townhome in the suburbs right now, it's very difficult. Probably not a good time to bring more of that product to market. People are struggling with mortgage financing and stress testing and used to be able to buy that $800,000 home. And now they're either waiting to see if those single family homes will come down to $1 million for a while so they can stretch to that, or they're being forced into a $650,000 home because they can't qualify for a mortgage. But when I thought about this whole discussion about is it a good time to buy or not, and my answer was kind of, it depends. I think about a story with a personal friend last night. So we've got a friend who's going through some very challenging life circumstances, and they own a number of properties. And because of a situation in their family, they need to figure out what to do. So I remember having a conversation with her last night. And she owns a property in the North Shore and bought it a while, and she's stressed about her family situation and being on her own and with her daughters, and what does she do? And so I just asked a lot of questions. And I said to her, well, let me ask you a question. Right? If you sold it now in the next 30 days, because nothing's selling at that price because prices have gone up a lot in the North Shore, how would you feel? And what would you think? And how much would you lose? And she said, well, if I sold it here, I'd probably be okay with this much and I could lose this much. And I said, okay, so if it doesn't sell in 30 days after that, how would you feel about continuing to rent that and keeping that for a couple more years? Because do you believe at some point in the next 3 to 5 years that home is going to be worth more than you paid for it? And she said, as much as I wouldn't feel good about that, for some reason I just really emotionally want to do this. If it doesn't sell in a month, I could probably get my head around renting it and keeping it for a while. And then I think I would make more money. So she has to make her own decision. My job was just to guide the process, and part of that's my aim tonight, is just to give market information and drive the process. So just to give you a bit of quick background, Fifth Avenue's been around since 1980. We work exclusively with developers. We do work with consumers like you direct, and more importantly, more increasingly, we work with you and your realtor representatives. We're involved though, right from land. Right from the time our clients buy land to configuring the product, figuring out what to build, how to price it, and actually taking it to market. So we have to help our clients make a lot of really important decisions, and that's some of what we want to share with you tonight. That in mind, one of the things that most people don't realize is that multifamily, you really need to be careful with the media. And I'm not trying to pick on the media, but I'm saying it's very popular to sell newspapers. When the market was hot, Global and everybody was chasing all of you to get your eyeballs and get you to read their papers by talking about outbidding each other about how hot it was going to get. And now from a news perspective, people are chasing the bad news story down. Who can find the worst story? Because guess what? It sells, right? But there's some specifics that we need to draw to. First of all, they always draw attention to resales and never talk about new. Do you realize that last year, 14 or 15,000 new homes were sold? New multifamily apartments, townhomes, etc. That's excluding single family. And that maybe 5% of those were actually on MLS, so they were tracked. CMHC tracks pre-sales. We track pre-sales. It's meaningful data. This report here I've been working on for 10 years, and it's free. You can go to our website, and you can see in a simple page at a time exactly what's selling, what the trends are, what the issues are, whether it's a yellow market, so a developer may be giving you deals because they don't want to launch new product. So I encourage you to go to our website. It's free. Help yourself. It's data the press doesn't get. They don't report on it, right? Imagine being in the car business and reporting only on used car sales and not talking about new cars. And what's happening is new is becoming a larger and larger share of the market. And by the way, so is strata. Strata is significantly becoming a larger share of the overall market. So the news is always about that single family home in the west side, and the person, can't sell for $3 million and their $2.5 million is all they can get. They don't talk about the subtleties by neighborhood. So I really encourage you to pay attention to these stories and dig deeper, because in there are the opportunities that should be considered for buying today. So my aim was just to stimulate some conversation, have a talk with you, and we'll get to the questions in a bit. But I did want to throw a little data on the table. I got to keep up with my slide warrior next to me here from CMHC. So new development stats, which you'll see on here, and these slides will be made available, is essentially, even though prices are coming down slightly from a new perspective, there's still a significant amount of valuation difference in the suburbs. And what's interesting to me is that in 2008, right, 2006, 7, and 8, when the market was very vibrant, and we've been through an amazing 10-year cycle. One of the things I learned in those research for 10 years was don't underestimate the strength of the Vancouver market and its resiliency. Things are down right now. They aren't going to stay there. It's just a matter of which experts write about whether they go up in 2021, 2023, or 25, but they're going to go up, and they're going to go beyond the levels, in my opinion, that they were at peak before. There's just too many fundamentals supporting that. But in the short term, there are opportunities, as you said, there's some buyer's market situations, there's some opportunities out there, but there is still also a shortage of affordable product on the market. And that's why people are still buying, because they know they're not necessarily going to make enough $300,000 to $650,000 product, so people are buying it now. But what you'll do is just the affordability gap. In 2008, the investor had moved out to the Fraser Valley, but the end user wasn't that present. And when the market corrected with the global recession, Vancouver developers were able to bring prices down to $500 or $600, and it was like a big sink draining water. Everybody that was interested in the valley came rushing back into downtown. That can't happen this time. It's not happening for two reasons. A, the suburbs have matured in terms of lifestyle, job base, etc., that people do not necessarily think that I'll settle and live in Langley or North Delta because the holy grail was Vancouver and I can't afford it. Well, guess what? There's a lot of people that don't think about that and don't want to spend an hour in the car each way, right? So that is an interesting trend, that there's more sustained real demand and investor demand for the valley than there was in 2009. Plus, developers can't do it. They can't go to 500 square foot. Vancouver, your cost base alone for land is about $400 a square foot. Your construction cost for an average concrete condominium is probably about double that. or 400 or so. So now you're at 800. So prices are going to come down, but they're not coming down very much. They're coming down. They're off right now, and they might come down a little more, but the cost base won't allow developers to do it. So if that's the case, right, prices will come down, that inventory will clear, but developers in certain markets like the North Shore of Vancouver may decide not to release product, which will again turn things back to a seller's market as opposed to a buyer's market. And you can see the trends, and the trend is that the valley prices have really started to close the gap on Vancouver, but there's still, in these slides, a significant affordability gap that doesn't get talked about. Whenever the media talks about Vancouver, they aren't talking about all of Metro Vancouver. They're not including Surrey, which is about to surpass Vancouver as the largest municipality in British Columbia. Okay? So it's, again, I'm really cautioning you, really listen to those news stories and dig deeper. Single-family prices, yes, those are coming down. They're probably going to go back at some point, but they are coming down. So there's some good buys for single-family right now. And there is some traction in the new single-family market in places like South Surrey and Maple Ridge at about 900 to $1.1 million. There, you're seeing that 900 price in Maple Ridge again for a brand new small lot. That's not going to last. So who's buying right now? The empty nesters, people my age whose kids are kind of growing out of college, are still very active. My concern a little bit about the empty nesters is we're not supplying enough product for them. By going to 300,000 and 650 developers are starting to create more first-time buyer product, but this and the downsizer, we're undersupplied of product that's suitable to get out of your single-family home. The investors are very active in the Valley right now and really believe in the long-term things in Surrey and North Delta and White Rock. They're less so. They're taking a bit of a pause. They're very active in Surrey City Centre. So, and a lot of those investors are not, and I'm all in favor of some of the government intervention. The assignment registry I'm a big fan of. I think we should get things more transparent like that. But you'd be surprised how many of these investors are actually not speculators and flippers and not offshore. Out of the 1,000 units we sold last year, we maybe sold 5 or 7 to foreign buyers. So there's still probably in the news more of that goes on, but not in our world, out in the suburbs. The downsizer, what I'm worried about is we're not building enough product for these folks. They need 1,000 to 1,300 square feet, and developers are so worried about risk and having to sell fast. And yes, they need a new norm, and it'll take a little longer to sell, but we're not building enough product for these older people. And the other one is the exodus is seriously on. 60% of almost the 400 homes we sold in downtown Kelowna in the last couple of years are people who are pre-retirement buying from Vancouver. They're getting out of here. This is not the city they wanted to grow up in or grow old in. It's too busy. It's too quiet. There's too much traffic. They may keep a small apartment here. Now they'll get taxed on it. But this buyer, I'm really concerned that we're not supplying enough product for. And if you haven't noticed, we're about to go through the most significant aging on the planet. We're into it now. Young families, and I think the only thing that I'm cautious in the suburbs is young families in places like the North Shore and downtown are quite comfortable accepting a 2-bedroom or a 2-bedroom and den apartment as their lifestyle. Now, we're not quite Manhattan, we're not there yet, but a lot of these municipalities think this is the bomb and they want us to build all these 3-bedroom apartments out in Surrey or Langley or White Rock or South Surrey. It's not there. People can still afford a townhome. They're not ready to live in a multifamily with shared walls like that where they have to worry about their neighbors getting upset. It's going to become a norm in Vancouver. I think that the young family still prefers to be able to get a townhome if they can afford it, or if they have one child, they'll move into an apartment and then they'll try to bridge into that. So looking forward, will there be more housing options? I think it's likely that there will be some more product coming to market, but prices are likely to flatten out or come down, more so in Vancouver, a little bit less reduction in the Valley. I think there's lots of desirable areas for purchasers that people are attracting. Abbotsford and its historic downtown has taken off, and 65% of the people that are now moving back to Abbotsford can work in Abbotsford and live there. You're seeing things with the Aldergrove Town Centre. There's a big public information. Surrey City Centre had 900 new homes sold, has 5,000 people just move into it, and another 7,000 people moving into Surrey City Centre. That is a major community transformation. Pre-sale still makes sense in certain cases, right? Where it's scarce product, and if you don't buy one early, you're not going to get one. So master on the main homes, focused for downsizers that complete in 6 months on golf courses or nice flat sites. Those are still real popular. The $300,000 to $650,000 condominium, the townhome between $500,000 and $650,000, those will sell out very quickly still in the Fraser Valley and the suburban markets for the foreseeable next year or so. So pre-sales on those, if you want to get ones, make sense. But there will be some markets where pre-sales in the short term don't necessarily make any sense. If you're not worried about selection, you don't have to make a quick decision. If you don't see an opportunity for some capital appreciation, or if you think prices are going to go down. And again, the trend towards multifamily is going to stay very strong. People are going to continue in the future to move east out of the center areas, and with additional transit and these things, those areas will be attractive. First-time buyers are much more comfortable with the suburbs. The suburbs are not their father or mother's Oldsmobile anymore. It's not, you're not trading off lifestyle for affordability of housing. I think the debt is still a concern, and where the debt levels are going, I think some people are going to explore different forms of creative housing like co-housing, and we're still not ready to really address the needs of an aging population. Thank you for your time.
Thanks to Eric and Scott for those presentations. Given the time, maybe I'll canvass the audience or those online. Do you have any immediate questions? I'm happy to pose some to Eric and Scott, but if there's some burning ones out there, let's take those. Yes. Somebody will come with a mic.
Hi there. For Scott, as far as trends on the North Shore, you mentioned there's not enough inventory for downsizers, which is me. I'm in that situation right now. What would you say with regards to trends or aspects related to that on the North Shore?
Well, the North Shore is interesting because it's really three markets, right? West Vancouver, the city, and the district. So North Van, the government doesn't want to, they've almost said they want no new development. So it doesn't look good for you in the long term. Prices will go back up quickly if there's no new development. But the area in Lonsdale still probably needs some more product targeted to downsizers. The two things downsizers like the most, and I'm kind of making a joke, but it's partly true. They like to be able to walk to the doctor, and they like to be able to walk to get liquor. So those neighborhoods like Lonsdale and that, even though it's a little steep, need more downsizer product. And I think the challenge is the developers realize they take longer to sell. So they don't want to bring that to market because they need to sell so much these days because the banks are so scared that they have to do a certain amount of pre-sales to get their construction financing. So you used to be able to build downsizer product in North Shore and finance it at 35% pre-sales. Now the banks want 60 or 65, a lot of them. So I do think there will be some more. I think the city of North Vancouver is probably going to figure it out closer to the water before the district does.
Great, thanks. Other questions? One there?
May I?
Oh, yes, go ahead, please.
Yeah, thank you for sharing. Yeah, my name is Raymond. I'm from Singapore. Okay, but my daughter study here. So my concern is there are a lot of young people that is going to graduate very soon, and they're going to think of a job here. And what is your opinion about more shoebox development, you know, so that you can allow all these young people to stay here and work within, you know, Vancouver, and otherwise, and build houses below, say, 200 to 280,000 range? Will there be a lot of developers or the council that will approve such a development for affordable housing? Shoebox development.
Do you want to?
So I'll jump in on that. First of all, so having had the opportunity to market in Singapore, one of the things that's amazing about Singapore is it as a nation has made it a mandate to encourage home ownership across the population, and they see it as a way of helping create a lower debt, right, and a wealth strategy for the population as a whole, correct? Singapore is very advanced in that area, correct?
Yeah, it's correct. One portion of it is correct, but the other portion that I'm not very, but that I'm quite concerned is that in Vancouver you get freehold properties, yeah, I think, and in Singapore it is you will deplete because it's only a 99 years leasehold. Yeah. All right, and come 35, 40 years, you will find a decay in, you know, in the value of the house. Yeah. So that is the concern.
So to answer your question really comes back to the whole point about densification. And one of the things that troubles me about our recent civic elections, for instance, including Surrey, was how low the voter turnout is. So the problem is we need to take this seriously. If it's a housing crisis for supply, we need to take density seriously. But the problem is the people that are the most vocal, and possibly the minority, are the most vocal, and the rest of us sit and talk about it in coffee shops and don't get active and don't vote and don't go to city council meetings. So that is not likely to change at the pace we need it to change unless we all get off our chairs and get a lot more active on that topic.
I just wanted to make a comment too. I was in Kamloops yesterday. I met with a builder up there, and that builder is actually building micro suites in Kamloops, one of our cities in the interior, 320 to 350 square feet, and they sell for between $135,000 and $175,000. And in a city like Kamloops, even those units were flying off the shelf. And so I think Scott's right around encouraging those kinds of different forms of development make a lot of sense.
Yeah, it makes a lot of sense provided industry is there. If the government don't shift the industry there or put up an IT park or some kind of a creative park, these young people, how do you get a job and also finance a house? So when you build a shoebox or a minimalist kind of development, there must be job there. There must be an industry that is nearby. So is the Vancouver trend, following that kind of thing, or it can be a situation whereby it's like LA right now or Silicon Valley, whereby people are staying in caravan, and work in the Silicon Valley. You see. So what is your take on that?
Yeah, I think we should be encouraging local governments to look at different forms of development. And as Scott said, density is a good way to do that. I'll ask if there are any other comments, questions in the audience or anyone online. We have a bit of time left, so maybe I'll ask one. Scott, you talked about the buying pre-sale, buying existing or buying new. Maybe you could just expand on that. I'm guessing you're going to say it depends, but maybe you can take that one on.
Well, maybe I'll take it from a different perspective and say, okay, right now, who's still buying pre-sale? Okay, so in terms of particular things like downsizers, where they find a location they really like, and they know there's only going to be one development with 1,000 square feet to 1,300 square feet, they can't wait. They need to buy it now. It also gives them the time to figure out what to do and save money. And there's some interesting companies that are out there now. The market shifted a bit, helping them with saying, well, you can bond for part of your deposit. So you leave your money in an RSP, you put down a part of deposit, you pay for a bond, the developer's happy, you kept your capital operating high, but you've got it now. Because generally at all our downsizer projects right now, because there's not a lot of supply for it, they don't ever get to the market and have product yet to sell when it's finished. So if downsizers aren't moving forward quickly right now with more and more aging people, they're not going to get one. So selection-wise, downsizers, they're moving too slow, but there's still not enough inventory, so it still absorbs quick. And then the first-time buyers and the investors are competing with each other all over time for those price points. So if you're a first-time buyer, you've got to act quickly, because if you don't buy it at 300 to 600, the investor's buying it because they like the rents and the long-term story on it.
Great. Maybe I'll turn to, you have a question online?
Hello, so this question's from someone online. They're looking to buy a one-bedroom condo around $900,000 in the next little while, but they're not in a rush, so they're wondering if they should do it now or if they should hold off.
Eric, do you want to take that one on? So this was looking at a one-bedroom condo, spending up to $900,000. Should they do it now or wait? I think that was the question.
Yes, that was the question, and to specify, it was in Vancouver.
Okay, well, I mean, it really depends, and as Scott has developed over the evening as well, I mean, it depends on your goals and your financial situation. It is always a good time to buy if you need a home, right? And CMHC always encourages buyers to, choose a home that meets their needs, that they would like to live in for a long time, and that you can afford both now and in the future, where we might have rising interest rates again as the economy strengthens. So, Scott, I don't know if there's anything you want to add to that, but about the specific product.
No, I was going to answer that it depends, but it really does depend, looking at which specific address you're talking about and which particular home. Right now, there are some good buys out there, and there are some particular ones. So while you might find that you could buy a larger one-bedroom for $900,000 or $850,000 in 6 months, it might not be as good as the one you could get today for $900,000. So what I would say is now's an excellent time to be looking for value, and if you find something that you're going to be happy with and that you think's a fair price, jump on it now. Don't wait.
Maybe we'll take one more question before we wrap this up. Any other questions from the audience or those online? Yes, one. We'll just, a microphone is on its way, so others can hear you.
Is there an advantage to using a realtor?
So full disclosure, I am a licensed realtor. Okay, I don't trade resales, but I have to be licensed to do my job. Is there an advantage to doing a realtor? I think there's an advantage to using a realtor if you have a good realtor who represents you and your interests and understands your needs and motivations. I think really, if you find the right realtor, from a developer's perspective, and it's enhanced by new legislation, there is no advantage to you going to a developer and saying, look, if I don't have a realtor and you don't have to pay my realtor commission, can I get a better deal? The answer is no. It's your choice to be represented or not. I think it's very interesting in residential that the developer or the seller pays the buyer's agent, whereas in commercial real estate, it's often not the case. The person representing the buyer is paid by the buyer. I don't think we're going there. So in other words, if you find a realtor and if you're very competent with yourself and making unrepresented decisions and trust it, that's your choice. But definitely, if you do choose to a realtor, do your homework and pick a really good realtor that you're real comfortable with, ultimately, that you trust, and whose sole interest is your interest, not selling your property fast so they can make their medallion points or something like that.
Great. So please join me in thanking Eric and Scott for their presentations. Just a reminder to fill out your questionnaire, and the next session will start at 6 o'clock, so I'd encourage you to visit the marketplace. Thanks very much.